Yo, what's up, everybody? It is Friday, June 7th. So markets were all down today. We had a good job number, 275 or 272 on the payrolls. The forecast was for 165. So the actual number blew away the forecast. Just shows that the labor market continues to be strong. And of course, the reaction to this was your classic expected monetarist zombie selling, okay? Because now, this jumps back and forth daily, folks, daily. One day they're all excited that the Fed is going to cut rates. The next day something else happens, some number comes out like the job number, and now they're all skittish and saying that the Fed's not going to cut rates. And who knows, on Monday there'll be something else that'll make them think that the Fed's going to cut rate. You cannot invest like this. This is manic, insane behavior. But I've said so many times in the past that this whole monetarist paradigm is a kind of a psychosis. It's a kind of a mental illness. It is rife in the economic reporting. It is rife in the media. It is everywhere. And that's the viewpoint you are always going to get. That is the explanation through which all these things will be talked about. So nothing new here, folks. We'll move along. So yeah, the market, it rebounded for a while and then it sold off near the close. And remember, I've always said to you guys, you fade these monetarist zombie moves. You go against them because, my helicopter friends, you go against them because their entire understanding is wrong. It's backward. All right? This is why they all got it wrong when the Fed was raising rates and they didn't see that it would translate into historic interest income transfers into the economy. They believe that rate cuts are going to be positive when in fact what actually will happen will be a removal of those interest income transfers. So that will mean kind of like a period of sustained slow growth. I want to talk about growth for a second because that's the core thing of what I look at. I know I had some people on here thinking that I look at the futures market. They said that, Mike, it's the tail that wags the dog. No, I always talk about my core analytical approach, which is the fiscal flows, which is the first derivative, and that is all that's used to forecast economic growth prospects looking forward. Now, if you remember, last month, I said when the initial second quarter GDP forecast came out from the Atlanta Fed in their GDP Now forecast, it came out initially at 4.2. I said, no. That's never going to happen. It's going to be revised down several times, I said. And it's going to go down at least to where first quarter was at 1.6%. Consequently, that's exactly what happened. We had 5 downward revisions in that Atlanta Fed GDP Now forecast. It came down last week to around 1.6%, 1.5 to 1.8%. Then I said this week, and I don't really like going over and rehashing those things, but I think it's instructive sometimes to just point it out. I don't like doing it and say, oh, look at what I said. I don't like it, but it's kind of like I have to, I have to go over this again just so, it's for some of you, it's still like a learning process to understand, to follow it, etc. I said that I am now seeing government net transfers, right? I've been talking about this a lot. Government net transfers, aka the deficit. I said that the contraction, the year-over-year contraction, I said this earlier this week, that the year-over-year contraction in those transfers has stopped going down. It's stabilized, okay? And I said, as a result of that, what I'm seeing there, I think the 1.6% second quarter growth rate, that is the bottom level. Like, we're not going to get worse than that. And as a matter of fact, I even said we could see some upward revisions now, because that decline in net transfers, it has ceased. It's still down 185 billion versus last year, but that's a little bit of an improvement from it was like 199, 200 billion just a few days ago. So that, and it looks like, because leading flows are picking up, if leading flows pick up, that helps. That's like, think of the swimming pool again. It was draining out. The water was coming out of the pipe, but the flow of the water out of the pipe was not enough to offset the drain. Now the flow of water coming out of the pipe equals the rate of the drain. So what happens there? The water stays stable. If you have a swimming pool and you got a drain and you're trying to fill it up, but the water flow is not equal to the drain, what's going to happen? The drain is going to continue. But then if you crank the water up, it'll stabilize in like an equilibrium, right? That's where we are right now. So that 1.6% growth, now that's good because it's still growth. It's not fast growth, but it's still growth. And I've always said, if there's growth, the stock market is going to go up over time. It's just the rate of growth will determine the rate of climb in the stock market, okay? Because growth equates to higher profits, higher wages, higher consumption, higher investment, all that stuff. It's a virtuous cycle. So that's good. We know where the lower threshold is. And if that year over year negative differential is stable now, and better yet, if it starts to come down, like if that negative gap starts to shrink, growth is going to improve. At least the forecast will go up from that 1.6%. I think that could be where we are right now. So here's the thing. I said the market's going to, leading flows are strong. The market's going to stay positive, notwithstanding what happened today. What happened today was your classic zombie reaction. I mean, we know this. How many times do I have to go over this? We know they see something, oh my God, the Fed's not going to do this, the Fed's not going to do that, or the Fed is going to do this, the Fed is going to... I mean, it's a sickness, folks. It's a sickness. You go against it every single time. So today they sold it off late. All three closed down. We're good next week. I think there's even a Social Security payment maybe on the 12th. I don't know. I have to look at the calendar. But then we're good all the way until June 17th, which is not this coming Monday. It's the following Monday. We get another tax strain. We've almost fully recovered the April tax strain. Think about that. We're into June already, and we still haven't fully recovered that April tax strain. That was an amazing tax strain. We still have about 25 billion left to go to get the non-government balance back to where it was on April 14th. That's a big drain. Then we got another one coming up on June 17th, but it's not going to be as much as the April drain. So, the strategy now reverts back to you got to buy the pullbacks. We're in a positive mode until June 17th. Growth has come down from the fourth quarter, certainly of 2023. We had slower growth in the first quarter. And we now know pretty much where the growth rate's going to be in the second quarter, at some level above 1.6%. All right? Could be around like maybe in the low twos, something like that. Let me just mention that this past week, we had two rate cuts, one by the Bank of Canada and one by the ECB yesterday. And that's very unusual. I have to say, it's very unusual to see foreign central banks front run the Fed, especially when it comes to rate cuts. Because, these central bankers, they're always worried about inflation and monetary discipline. They don't like rate cuts. You need to have very, very dire conditions for them to even consider rate cuts, which actually it's funny because rate cuts are deflationary, but of course in their minds it's a stimulus. But we had two central banks this week cutting rates, and the Fed will follow them at some point this year. That's my prediction. Markets right now are predicting a September rate cut. Earlier this morning when that job number came out, I checked. December was off the table. Maybe it came back on. This thing, it changes like all day long, man. This is, if you think like the day-to-day jumping around of the monetarists is crazy. I mean, this stuff literally jumps around like all day long. Like one day, one hour there's a rate cut, the next hour there's no rate cut, the next hour there's a rate cut again, followed by no. I mean, if you don't think that's some kind of insanity, I mean, and you got to be insane too, So anyway, that's it. It's Friday. Enjoy. And have a great weekend. And don't forget, please like and subscribe. It helps the channel a lot. I appreciate it if you do that. And don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. I'll see you next week. Have a nice weekend. Bye.